Welcome back. You're watching Money, 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 and this is the festive special. We are talking about everything that shines and glitters, precious metals, and what place they should have in your portfolio. We've discussed gold. The outlook seems to be bullish. Kunal is quite convinced that even silver could have a great 2018. Platinum, palladium, maybe too exotic. That brings us to diamonds, girls' best friends. Now, the question is, will they be your wallet and your portfolio's best friends also or not? Let me first ask you, Ashish, what have the price trends been like? And I don't know, I mean, hand on heart, when we go and buy diamond jewelry, typically from an investment standpoint, how much do we stand to lose before we think of, monetizing the value maybe a year or 2 years down the line?
If you see over a period of, let's say, last 10 to 15 years, because certification has come in diamonds in a big way, the risk in buying diamonds has substantially gone down. So you know what you're buying, it is certified by a third party. So even if you're wanting to invest in diamond, you should buy a certified diamond from a reputed jeweler. That is number one. And yes, the prices of diamonds will go up, not as much or as frequently as gold or silver would move. But over a long term, medium to long term, say 5 to 7 years, the prices will go up.
Last 1 year, what did we see?
Last 1 year, they have been stable.
Stable, largely
but
stable.
If you look at 0.50 carat plus, which are the solitaires, so to say, if you stick to the better quality like higher color or VVS, they are always in short supply, and they being natural diamonds, they are getting extinct. So the prices of those quality of gemstones will keep moving up.
And typically, if we're talking about solitaire, as a consumer / investor, how much should I be prepared to sort of lose off if I go in for a resale? Supposing
you come back after say 4 to 5 years, you'll lose about 4 to 5% of the price which is prevailing at that point.
At that point in time.
So you will not lose much. You'll gain something out of it.
Okay, fair enough.
And you can flaunt your investment. That is
all right, fair. That's a big catch for a large section of the audience, particularly the women out there for sure. Kunal, you were telling us that recently exchanges have started trading in diamonds as well. How's that playing out?
Yes, it has started in India 1.5 months back, and it is picking up. It's too early, but the volume has been gradually moving up. You can take the delivery and you can store that delivery in the vault and you can resell it. So you can give it back to the exchange also. So this kind of exchange has been started, and I think it's definitely over a period of time, a lot of investors will start participating, hopefully.
But I'm guessing low volumes as of now.
Volumes have been thin because in commodity market, the market making is not officially allowed. So it takes a lot of time for these kind of contracts to get highly liquid.
Okay, fair enough. All right, as we come down to closing thoughts, it's great ideas, diamonds, platinum. I mean, it's a delight for a lot of the consumers to think it can be investments. But on a more serious note, Mr. Rungta, what is your advice in terms of portfolio diversification, looking at market environment right now? And at what proportion should some of these precious elements find?
So, I think among all the precious elements, I would stick to gold. It's known. There are financial products available. So, stick to something that is known. So, we are not talking consumption. If you are buying jewelry, please buy what you can flaunt.
Yeah.
Okay. But when you are talking investment, please buy what you can understand.
Sure.
So, I think gold fulfills that need. As a certain percentage, you should do it. Preferably do it through financial needs. Jewelry, again, when you buy gold jewelry, it's not an investment.
Yeah,
okay.
One has to keep that in mind. Don't try and convince yourself and family members saying it's an investment, so maybe it's okay to splurge extra.
Anything, when moment you take it out of the showroom, 30% gone, can't be an investment. So, I think if you're clear on what you're doing, gold definitely should be part of any Indian's portfolio, simply because of the social consumption. So, if not today, you will probably consume it 10 years later, 15 years later. So, it should be part of your portfolio. Buy it systematically. Stick to something you know. So, stick to gold.
Okay, all right. So, that's a thumbs up on gold. Kunal, if you were to give one somewhat tip to our viewers in the commodities basket, exotic or otherwise, what would that one tip be for this year?
Well, the most common is obviously gold. I just have something to add to what Sir said. In today's financial world, where all the central banks' balance sheets are so much leverage. So I think that makes gold very interesting for retail investors, and I believe that aluminum as a commodity is going to do very well going forward. 10% of the global supply is at stake. China is cutting aluminum production in order to curb the pollution like they did in steel. So aluminum is one commodity where we have been very bullish, and it is likely to move up.
Okay, and you were talking about in the break about certain gold funds as well. International funds that invest in gold mining companies. What kind of returns can typically one sort of expect there?
It's absolutely if gold prices starts moving up, so you will suddenly start getting they invest in gold and they invest in gold mining funds. So you will start getting more returns than actually investing in gold. So
this year gold has done about 8.5–9%. Yeah. How much have these funds returned?
If the gold mining companies are doing well, so it will probably deliver 12 to 13%.
Wow. Okay, Mr. Rungta, any restrictions in terms of, because these are funds managed overseas? So as an Indian, how much can I put in? Any sort of restrictions?
So resident Indians can put in 250,000 per person, 250,000 US dollars. That's roughly 1.5 crores per person per year.
Oh, that's a big ample cap for retail investors.
I mean, there would be a handful of Indians who can actually
exhaust
that sort of, and it's per person. Even a one-day child is entitled to a 1.5 crore limit.
Okay, so these foreign, gold funds, if you know them well, if you've studied them well, then maybe that's an option. Finally, Ashish, I'll come down to the last word with you. What's the one advice you will give to consumers now, not just investors, but even consumers who want to buy some, jewelry for the festive season?
Currently, this season, lightweight Italian-style jewelry is in vogue, and diamonds are back after a short break. Yes.
Okay, diamonds and gold, some things perhaps never go out of fashion. Gentlemen, thank you so much for joining in and sharing all of those insights on the precious metal space with us. We wish you all a very happy festive season and a very happy Diwali as well. That's it on this week's edition of Money, Money, Money. We will see you again with another festive special next week.